Gold and silver have been hitting new all-time highs recently. I would characterize the price increases as parabolic spikes. I generally sell assets experiencing those kind of spikes and then just wait for an opportunity to buy back at a lower price. Parabolic spikes in prices for assets, it doesn't matter which asset you're talking about, have a tendency to collapse upon themselves. This was the case for stocks in the late 1990s, as an example. With asset classes where a fair value range can be established using objective valuation criteria, I can be more confident about selling when the price is far in excess of what I would characterize as a fair value range for the asset using traditional valuation criteria. For stocks, those criteria would include the trailing 12-month GAAP PE and the estimated GAAP and non-GAAP EPS over the next 2 years, or at a minimum the next 12 months, the Buffett indicator, the Q ratio, the Shiller PE ratio, and many others. Different criteria exist for estimating the fair value of income producing assets like real estate and bonds, but there are at least objective and fundamental reasons supporting whatever fair value range that I apply for those kind of assets. What is the fair value range of gold and silver, and how would an investor determine the fair value range of precious metals that do not have earnings, pay rent, pay interest, or pay dividends, and do not own other assets that can be objectively valued? I discussed in an old blog several efforts to establish a fair value for gold and found all of them to be unsatisfactory. I will try to find that blog post and at least reference it in the more section below. The key to gold's price, in my opinion, is how concerned investors who are willing to own it, which includes me, are concerned about fiat currencies as a store of value long term. The concern about the currency debasement is high now, particularly after the massive money creation by the Fed in the 2000 to early 2022 period, when the M2 money supply increased by over $6 trillion, or about a 41% increase, and slightly over 2 years and 3 months. I will provide a link to the St. Louis Fed chart on M2 in the more section below. The data is on a monthly basis. And many investors, including me, are becoming increasingly concerned that the U.S. is headed for a fiscal train wreck, where one result would be the loss of the U.S. dollar's reserve currency status, and possibly another one would be multiple failed Treasury auctions where the Treasury is unable to sell a sufficient amount of new debt to pay off maturing obligations and to finance the budget deficits, which have been running over $1 trillion per year, which causes the Fed to step in as the buyer of last resort and buying whatever cannot be sold at the auctions, a result called debt monetization. And if you're wondering what the reaction will be by investors to such an event, it will be extremely negative. I am predicting this will happen, as I've been saying in my blog for years now, but the timing is impossible to predict. It depends on whether some efforts are made to address the situation now. My current time frame is 20 to 25 years, more likely earlier than later. than 25 years, but that is just my best guess at the moment based on the data that I now have. I read an interesting article published last week, which I will link in the more section below, that silver is experiencing a massive short squeeze. Demand is far outpacing supply. The silver ETFs, as of last week, did not own enough silver to back all of their shares. I assume that situation will be rectified if it hasn't already been rectified, but do not know. It does not appear likely they will, well, it does appear likely that they will have to pay a lot to acquire enough silver to back the shares. I'm referring primarily to the silver ETF that has a symbol SLV. I do not own it. But the problem exists also for other ETFs that own silver. This article that I'm will be citing provides the number of ounces that these ETFs are short in owning silver to back all of their shares. I would note that the article mentions that silver's price has exceeded its 200-day SMA line, like now, by 30%, 10 times, and all were short-lived, with the average decline thereafter being 24%. As I said, these parabolic spikes have a tendency to collapse upon themselves. My cost basis in silver is around $7 per ounce. That was my last purchase price many years ago. I was buying the Silver Eagles, and it's close to $500 per ounce in gold. I've kept records of all of my purchases of those bullion, except for the one that I made when I was 13, when I bought a 1880s Liberty Head gold piece when gold was at $25 per ounce. I will not sell any gold or silver where I lack a record, and we'll just leave it to my heirs who, under current tax law, will receive a stepped-up cost basis to the value of the bullion on the date of my death. I am thinking about selling some where I have records of the purchase cost, and that would be for most of the silver and gold that I do own, but am unable to make a decision, partly due to the reason that I own those metals in the first place, which is the financial Armageddon scenario for the US dollar that I just outlined above, which is based on my current best guesses. And the other reason is that I would have to pay income taxes on the gains this year, where I already have managed to move myself up into a higher tax bracket with interest income. Stock and bond fund sales, at least one or maybe two I-bond redemptions, and to a lesser extent dividends, particularly from the money market funds like the Vanguard fund, where about half of my assets in my Vanguard fund were in the Vanguard Federal Money Market Fund. Since my interest income will be declining next year, as well as my dividend income from the money market funds that I own, I am postponing a decision on selling gold until January 2026. I'm not going to sell any silver. I did relieve the internal tension that I'm creating in my own psyche about taking profits by selling in the gold and silver bullion, by selling another 10 shares of the mutual fund PRPFX, which maintains about a 25% allocation in gold and silver. I have discussed in my blog several small pairs in that mutual fund so far this year, and we'll discuss today's pair in my next blog post. I'm working on my baseball card collection, which I've ignored for several decades after looking at the prices for what they're selling for on eBay now, and I'm sending off many to be graded by SGC. One of the ones that I found was this 1950 54 Hank Aaron. That's a rookie card of Hank Aaron. You can check the prices on those. I was surprised that people are actually paying as much as they are. I'm going to send that off to be graded, and I might sell that one um, uh, just in case there's a major correction in baseball card prices down the road somewhere.